Hello, and welcome to the June edition of the Dairy Market Update. This month, I'll be looking at how UK farmgate prices compare with our EU counterparts. Historically, UK farmgate prices have ranked poorly against others in the EU. If we focus on the main milk-producing countries of the EU, that's France, Germany, Ireland, Denmark, the Netherlands and us, then the UK has been at the bottom of the table in pence per litre terms over the last 3 years. The question is, why does the UK perform so poorly? We should start by looking at where the milk gets used. Here we can see a substantial difference in the amount of milk that goes into the liquid market. Nearly half of all UK milk goes into liquid, while the other key countries use much less. This is significant as liquid contracts tend to focus on volume over solids content, providing fewer opportunities to increase the price paid per litre through better constituents. However, our liquid focus does seem to give the UK a level of support in times when prices are poor, since the liquid market is mainly domestic and less affected by global commodity trade. In fact, when commodity prices go down, the UK goes up in the league table. We also know that some of the milk going into liquid markets gets paid on a cost of production basis, and historically this has been at a premium to standard prices. That would be expected to push the UK's overall average farmgate price up compared with the rest of the EU6, particularly when market prices are low. However, there is another major impact this liquid market has had on the UK, and that is how milk is paid for. If you look at the UK's payment rates for butter, fat and protein, they are the lowest of the EU6. We've already mentioned that many liquid contracts do not particularly incentivise solids content, but even if we just look at manufacturing contracts in the UK, the price paid for solids is still, on average, the lowest in this group. This seems to have had an impact on the amount of fat and protein in milk produced in the UK. We have a lower level than several of our competitors, particularly in protein. The impact this has on milk prices will vary by milk buyer, but it does mean that if we look at milk prices in terms of pounds per kilogram of solids actually present, then the UK isn't performing as badly as it first appears, ranking third out of the 6 countries. So, fat and protein levels in milk are one of the main reasons why the UK normally appears at the foot of the table, and those levels are at least partly rooted in our cultural focus on liquid milk production. Outside of the liquid market, milk solids are the valuable element of the milk, and other countries appear to be better at delivering those solids than we have been in the UK. The UK can learn from this. A pricing structure that more accurately reflects the end market value of each component could benefit all parties involved and ultimately lead to a more efficient supply chain. To keep up with how the dairy markets are developing, both here and globally, please visit the market section of the AHDB Dairy website.